Welcome, everybody, to the third of four sessions sponsored by SHED, Sustainable Housing and Equitable Development, and our Home Ownership Education Series. SHED has been involved with servicing our seniors, veterans, and disabled residents in University City for 15 years now. In the last couple of years, we've added home buyer education and new home construction to the kinds of work that we do. Because we are developing housing within University City, and in particular the third ward, which has a lot of affordable, smaller homes, working class people, well-built brick homes, and people keeping up their property as best they can, it becomes a perfect area for the first-time home buyer to enter this a part of the American dream, buying a home, building some equity, passing some wealth on to your children. So today's session is understanding your mortgage credit score, talking about all things credit, especially for the first-time home buyer. And for our presenter today, we have Waymon Williams, who is with Carrollton Bank, who will be leading our session. This session is going to be recorded and it will be available on the SHED website following this session tonight. Welcome, Waymon.
Thank you, Mimi. I appreciate the opportunity to speak with you all this evening and share information in regard to credit and anything credit related as it pertains to home ownership. So the first piece of information I'd like to share with you, I have a slide, creditability, okay? And, the number one question in regard to credit is, why should you build good credit? And there are 3 bullet points here. I mean, obvious reason, it improves your image in the eyes of lenders. It's going to improve your ability to get credit. And it also improves your chances of getting lower interest rate and more favorable loan terms. So those are 3 key points as far as credit and how it pertains to your mortgage. So let's talk a little bit about credit. Credit report. As you can see here, bullet points, what's in the credit report, your identifying information, your name, date of birth, of course, your social security number. It's going to probably contain employment history, and it will contain all credit that you've previously had and your payment history with those particular creditors. It will also contain bankruptcies, judgments, things that are quote unquote public record, and it will also contain inquiries that you've initiated. Who can look at your credit report? Of course, lenders. Lenders will be able to look at your credit report, landlords, potential employers, insurance companies, and financial institutions. One thing that a lot of people don't know is that all of those bullet points listed there, your credit impacts that. So as we talked about earlier, it's going to impact your ability to obtain a loan. When you're looking to rent, it's going to determine if a security deposit's needed and what it would be. Potential employers, insurance companies, financial institutions all look at your credit score because your credit score is looked upon as your kind of responsibility number. The higher the credit score, the better. The higher the credit score, the more responsible you look in the eyes of lenders. So that's a great reason to have a high credit score, to improve your credit score if it needs work. Okay.
Wait a
And
minute.
again,
How
go ahead.
how long, when you said, it has your credit history, going how far back? I mean,
Well,
forever and ever, or I mean, it's
yes, it does. It does.
oh,
It
wow.
goes for any account that you've ever opened. Yes, that should be on
Wow.
your credit report.
Okay.
Now, there's certain things such as bankruptcies that will drop off of your credit report after 10 years, but your account and your payment history for all accounts that you've opened will be on that credit report.
Okay.
Okay.
Hmm.
Again, the credit score, that's the number that determines your credit worthiness. It can range from anywhere from 300 to 850. You don't see many 300 credit scores. I have actually never seen one. Again, your target score is to be at or above 700 to 720. That is going to give you the most favorable loan terms for mortgage or anything that you're looking to use your credit for. Okay.
Mhm.
Waymon, why do you
Components.
see some programs that advertise credit scores as low as 630?
I'm sorry, what was your question?
Why do you sometimes see programs that advertise credit scores as low as 630? Are there,
Well, because those options are available in some circumstances. Those circumstances with individuals with lower credit scores, they're more than likely going to have to pay a higher interest rate than someone that doesn't have that credit score. So, I mean, a 630 credit score, 640 credit score is not going to get you as good a rate as someone in the 700s. But those options are available. They just kind of come at a premium. So you're probably going to pay a higher interest rate with that lower credit score than you would if your credit score was higher.
Okay.
Okay.
All right.
The components of a credit score, a lot of people ask, how is my credit score comprised? This circle in the middle kind of gives you a breakdown of what your credit score involves. Okay. 35%, that's the biggest number. That's going to be your payment history, how you've paid those accounts that you've opened. Things that impact that, if you pay late, meaning more than 30 days late, that's going to impact your score. So you always want to make sure that you pay your bills within the month that they're due. Okay. A lot of times there's a grace period where there may be a late fee involved, but as long as you don't go over 30 days past due, then that should not impact your credit. Okay. So it's very important to pay those bills within the month that they're due. Credit utilization. That is how you're using your credit. So an example of credit utilization at that 30%, and that's ideal from a lending perspective. What that 30% credit utilization means is that if you have a credit card that has $1,000 in available credit, you don't want your balance on that credit card to go above $300. Okay. $300 credit balance on a credit card that has $1,000 in available credit is going to indicate 30% usage. So that's the ideal scenario when you have credit cards. Keep that balance at or below 30%. Okay. 15% is going to make up the length of credit history. So how long you've had credit. People with newer credit are not going to have as higher scores as people with older credit or a longer length of credit, of having credit, because that gives the credit reporting agencies a true picture of your payment ability and how you pay loans. You're going to get a more accurate picture of someone with a 10-year credit history than you would with someone with a 1-year credit history. Okay. So the length of credit history makes up 15% of the component of a credit score. And then that final or next to last is going to be new credit. So any new credit that you've obtained within the past 6 months is going to impact your credit score. Okay. And then 10% is going to be the mixture of credit. Now, there's different types of credit. You have installment loans, which are going to be mortgage loans, auto loans, term loans, any loan that has a specific set payment that's due every month and has a defined payoff period is going to be what you call installment loan or installment credit. Revolving credit is going to be credit cards. So any credit card debt is going to be considered in that revolving category. Okay. So that is how your credit score is determined, by those 5 particular options there. So one question that we always get, how can you rebuild your credit? How can you rebuild good credit?
Mhm.
Number one, it's a lot easier to build credit than it is to repair credit. Okay. So one thing that a lot of people don't know, in order to have a credit score, you need to have had some type of credit within the past 6 months, meaning you have an account that you're paying actively on within that past 6 months. If you don't have any accounts that are open, that are reporting any payments, then you won't have a credit score. Okay, so the first thing that you want to do as far as rebuilding or knowing what's going on with your credit, you want to order a credit report. Okay, and we'll go through that in the next slide, ways to obtain your credit report. Okay. So once you get your credit report, you want to make sure that there are no errors on there. All right. Again, you want to pay the bills on time. Consider using auto bill pay. Establish an emergency fund. Uh, get direct deposit, which links banking and credit together. Having a bank account improves your credit score because there's certain things you don't have to worry about. You should be able to set up automatic bill pay. You don't have to have fees that you're paying for bills. You get direct deposit. You don't have to pay check cashing fees. So that all lends to establishing and having good credit. You want to have a budget or a spending plan. That is where you know exactly what you have coming in on a monthly basis and you know exactly what you have going out. That's going to help you maintain good credit or build credit. Two options for those that are looking to build credit. We have credit builder loans, which we'll talk a little bit about. And then we also have secured credit cards. We'll talk a little bit about secured credit cards. Next question. How can you use your credit wisely?
Mhm.
The goal with credit is to be able to pay it off as quickly as possible. Okay. So if you have a credit card, the goal is to pay that credit card off on a monthly basis because that's going to, number one, improve your credit score because you have on-time payments, but that's also going to reduce the amount of debt that you have, which is going to help you in the long run. Again, so charge small amounts, pay those off, and pay them on time. Do not max out your credit cards because that goes totally against that 30% usage rule, okay, or 30% utilization rule. So again, keep those credit cards at 30% usage or below. Don't open up a lot of new accounts. One thing that you will understand when you apply for credit is that you get a ton of solicitations for credit after that. So you're going to get email solicitations, you'll get text message solicitations. However you apply for credit, you're going to get offers for credit then. Because in the eyes of the people that are providing credit, you're shopping for credit. And how do lenders, finance companies, credit card companies all stay in business? By the interest that you pay. So credit card companies, finance companies, they want you to get good. They want you to get credit. They want you to apply. Okay. But again, don't open a bunch of new accounts at the same time. Avoid the minimum payment trap. That's one of the biggest things when it comes to credit cards. When you open a credit card and you start using that credit card, you're going to get a statement every month. That statement is going to have a minimum payment required. Okay. Your goal is to pay more than that because if you look closely, that minimum payment just covers the interest and a little bit more. Okay. So if we're going to use real numbers, if you have just say a credit card that you charge $500 on and you get your monthly bill is $25 a month. Okay. So you say, wow, that's not bad. I'm just going to pay this $25 a month and, I'm going to have this credit card. But when you look at the bill, you may see that out of that $25 a month payment that you're making, $20 goes to interest. So in essence, you're really only paying $5 towards the balance that you owe. And if you continuously pay that minimum payment, then you may very well end up stretching that $500 purchase that you made, and you may end up paying $800 for it because you've only paid the minimum on that credit card. So again, the goal is to pay those accounts off as quickly as possible. Definitely pay more than the minimum. Okay. Late fees, they're going to apply if you don't pay on time. Sometimes that happens, but again, you want to pay within that 30-day period to avoid any damage to your credit. When you're using credit cards, know what the fees are. Know what happens if you pay late. Your interest rate may go up a little bit. If you go over your credit limit, your interest rate could go up a little bit. Cash advances, I would recommend never doing that on a credit card because of the fees that are associated with it, the money that you have to pay back. It usually is just not beneficial to you. What I would advise though establish your emergency savings fund so that you don't have to do things such as cash advances. Okay.
Yeah,
Any
that's really
questions, Mimi?
important. Yeah, that's really important because there was one time when I'll put myself on the block. Um, I actually just misplaced a bill. And so then, it kind of dawned on me like I should have had a bill by now. The next month it comes in. The late fee there was a balance on the account. The late fee was larger than the finance charge because the finance charge tends to be a percentage of your balance, and the late fee was like 25 or $30.
Yes.
Well, and it's like, oh, so that never happened again. But yeah, an eye opener for me.
And when it comes to credit, I mean, usually unfortunately, that's sometimes how we learn. We bump our heads, we make mistakes, and we learn from that. So in regard to credit, what I would also encourage is to share information. Share information with your family, share information to those that are close to you. A lot of us may have been raised in a situation where credit wasn't talked about, finances weren't talked
Right.
about. Reason being, hey, you just worry about going to school, getting good grades, mom and dad, or your grandparents will take care of this.
Mhm.
It's important to share information, because we all have finances that we're going to have to deal with, and having kind of a baseline of that is going to allow us to do better financially. So I would always recommend sharing information, good and bad, with those close to you to help to make sure that they're in a good situation.
Okay, I agree.
Okay. Let's
Say any-
go. Go ahead.
You gonna say anything about the free credit report there at the bottom?
Yes, yes. Everyone is entitled to one free credit report per year. Okay, and our next slide is how to obtain a copy of a credit report. We'll go in depth about that. One thing, you get a free credit report at annualcreditreport.com. Okay, the thing about the free credit report, it's not going to have a credit score, but it will have the accurate account information in regard to accounts that you've opened, what your payment history is in regard to accounts, and you are able to view those accounts, determine if they're accurate, and if you need to make changes, you can, or if there is an issue or something that's not accurate, you're able to reach out to the credit reporting agencies. So from a mortgage perspective, there are three credit reporting agencies that mortgage companies use. And pretty much, I would say all finance companies use these three. They're going to be Experian, TransUnion, and Equifax. They would be considered the big three of credit reporting agencies. Anytime your credit score is involved, it's going to come from one of these three agencies. Okay. So again, annualcreditreport.com allows you to get the free credit report. There are some where you can pay anywhere from $6 up to $15. It's going to give you a credit report with a score. Okay. Again, your name, address, all of that information is going to be contained on the credit report, social security number, year you were born, the things that are not on there. There's no racial identifying information, no religious information, nothing like that is contained on the credit report. Really just your score and your account history, along with your personal information is there. Any questions about any of this, Mimi?
No, I'm good on this one.
Okay. So these are ways that you're able to get your credit report, who the credit reporting agencies are. When it comes to credit score, unless it comes from Experian, TransUnion, Equifax, I wouldn't necessarily go with that score. One other very accurate credit reporting thing that's kind of come to pass within the past couple of years, if you do have a credit card, typically when they send you your monthly bill, it will have your credit score listed there. If it's coming from, your regular credit card companies, that score is going to be accurate as well.
Okay.
Okay. So that's good information to use. not to speak disparagingly about Credit Karma or anything like that, but Credit Karma, they do offer their own credit scoring mechanism, which is going to be different than Equifax, Experian, and TransUnion because they have their own internal scoring mechanism that they have. So I wouldn't necessarily go with the score that they provide, but they're extremely good for reporting accurate information as far as what's listed on your credit report, or even someone that subscribes to Credit Karma and a collection account pops on their account and they get a notification from Credit Karma. That's accurate, but that number that they give you will not you can't, Credit Karma can't tell you that your credit score is this, and then you go to a bank and you tell them what Credit Karma says. It won't match up just because they have their own mechanism for scoring. It's not anything misleading. It's just that they have their own separate thing. And if you ask them about it, they would be able to explain, well, no, this isn't a mortgage credit score. It's not from one of the big three. This is our mechanism for scoring based on how your credit looks. Okay.
Okay.
Credit building tools. Okay. These are a couple of things that Carrollton Bank offers, but other banks offer those as well. The first thing is going to be your basic bank account. And I guess the question would be, how does that assist with building credit? Well, typically those that have bank accounts typically have slightly higher credit scores than those individuals that don't. The reason being is because, again, you have access to your funds more quickly. You're able to do bill pay online. You're able to set up auto draft, which eliminates you from paying late fees, which can impact your credit. It can it prevents you from paying bills late, which definitely impacts your credit. Okay. The basic bank account, that is an account that's available for individuals who may have had a negative check systems report up to $1,000. So just to kind of deviate a little bit, check systems is what is considered the credit report in regard to bank accounts. So when you go to open a bank account, they're going to run your information, your personal information, name, date of birth, and social security number through our internal program called Check Systems. That lets the bank know if you owe another bank. Okay, so if you've left the bank and you owed them money, maybe due to overdraft protection or your account was in the negative, and as long as that account is under $1,000 and there's been no fraudulent activity, then you're eligible for second chance banking. And bullet points here kind of go through what's available. You know, you don't have any check writing or overdraft privileges, which is okay because a lot of times that is what causes an issue for some people with the bank. They have overdraft protection. They've gone through that process. They may have overdrafted. Well, you know, if you have overdraft, you're going to owe a fee for that. So you owe the overdraft fee plus whatever you owed that they covered. A lot of times people don't have the funds to pay that, so they may stop going to the bank and then go to the check cashing place or Walmart or whoever can cash your check for a fee. So that's typically how you kind of get into trouble with the banks. Okay. Again, 25 minimum opening deposit. You still have ATMs. You still have access to the free ATMs. You still have online and mobile banking. $5 minimum fee. So the goal would be to stay within that particular account for maybe a year or so that you can get to your standard regular checking account. Okay. Any questions about the basic bank account?
So a person, I don't know if this is the right time to ask the question, but if I'm directing, for instance, my granddaughter, who's now getting, she's working during the Christmas holiday, so she's now going to be getting a paycheck. And I say to her, you need to set up a bank account because they will offer you direct deposit for your check, so you don't have to worry about that. But when she goes to open an account with a bank, she has to have, is there a minimum amount of money she needs to have? Are there certain documents she needs to have, especially as a youngster, 16, 17 years old?
So,
How does that work? Or does she go in with her first paycheck and say, I want to open an account with this? I mean, how does that work?
so a lot of that depends on the age. So in order to open, in most instances, in order to open an account on your own, you need to be 18 years of age.
Okay, all right,
If you're under the age of 18, um, you would have to have a custodial account, or there are some banks that do allow accounts for 17-year-olds. Okay.
okay,
Um, Important thing you want to ask and you really want the most basic bank account that they have. The goal is to get an account that doesn't have any fees associated with it, where you're
okay,
not paying monthly for the account. They may require you to have a minimum balance, but you're not paying monthly for that banking privilege. Okay, so
okay,
that's one thing. You want to look for a free account.
okay,
Okay. Um, Free or as little fees as possible. Again, I wouldn't recommend a young person having overdraft protection because they may not be as responsible as,
mhm,
us adults with that.
right,
Okay. The important thing again, know your ATM network because a lot of banks are in networks with other banks. So I'll give you an example. Our Carrollton Bank account, we're also in the US Bank network. So what
okay,
that does is that allows any Carrollton Bank customer to use a US Bank ATM without the fees associated with it.
okay,
That's a big drain on your money as well. You paying fees to withdraw your own money. So
mhm,
again, try to stay within your network as far as that's concerned to reduce the amount that you're paying towards that
right,
account.
okay,
Okay.
okay,
So yeah, that's what I would advise any young person. Go for the account that doesn't have any fees or as little fees as possible. You don't want any overdraft protection or anything like that. And then what are the rules for a custodial account versus a non-custodial account?
Is she going to need to show, I mean, something obviously with a picture or something, so like her driver's license?
Yes. Driver's
But does
license,
she need
ID.
to bring it, I mean, any other documentation or?
I would say driver's license, definitely. Social security card so that they can have a reference for your social security number. And really that should be it,
Okay.
and then that paycheck. But a lot of times the account is established before the deposit goes in. So, that would be the goal to have the account established before so that they can get set up for direct deposit. But if it's not set up, then they can bring that check, deposit that, and get the account started that way.
Okay, all right,
Okay.
great.
Okay. Carrollton Bank's credit builder loan. So it's not necessarily a loan product, but this is the way that the credit builder works. So you would come to Carrollton Bank, and there are a lot of banks and credit unions that offer credit builder loans. And we would start you with a $500 credit builder. And the way that that works is you're not approved or denied. If you apply and you go through the steps, you're basically automatically approved. And the way that it works, we start you with a $500 credit builder, and what you do is you pay about $42 a month for 12 months. It's about $43 a month for 12 months. And what happens is the bank reports those payments that you make to all three credit reporting agencies. So you'll get a report to Equifax, Experian, and TransUnion that you're making a $43 a month payment to Carrollton Bank on a loan that you have. So you do that for 12 months. At the end of that 12-month period of time, you have a $500 CD. So basically, you pay 12 months, $43. That money all comes back to you. So it works as a savings plan as well as a credit building tool. So
Mm,
for that individual that needs to build their credit, not repair their credit, you open a credit builder account, you should see your credit score start to increase after that third payment is made. So within 3 to 4 months, your credit score should reflect those payments being made, and you should see a jump in the credit score. Okay. At the end of the 12 months, that money comes back to you for you to do whatever you'd like to, as far as keeping it in the savings or spend it however you want to do it. But that is how the credit builder works. You can go anywhere from $500 to $2,500. Just understand that that $2,500 payment is going to be 4 to 5 times what that $500 payment is. That's why we always start them with that $500 payment, because that's going to give them the minimum payment on a monthly basis.
Okay.
Okay. Best thing to do with that, you pay it in full throughout the term. Even though your credit score is probably going to increase after 3 to 4 payments, you want to take it through to the term because you want to keep receiving the benefit of having those on-time payments reported.
Okay. All right.
Okay. So that's how the credit builder program works. This next slide that we have is being banked. Very important. I mean, that's a huge, those, I would say those are probably the two most important components as far as home ownership, being responsible financially. You want to know what your credit score is, how to take care of your credit, but then also you want to establish that bank account. Bullet points here are reasons why. It's more expensive to not have a bank account. Okay, so just think about those people that do get paid every week and they don't have a bank account. They're paying a fee out of the money that they've earned to receive that money. On top of that, they're paying fees for things such as paying their bills. So if you have an Ameren account, a Spire account, but you don't have a bank account, your options are either pay for a check, pay for a money order, mail it, or what most people do is they go to the grocery store at the kiosk and they'll pay $2 to $3 to pay their bill. So imagine that you're paying your bill, but then you have to pay money to pay your bill on top of that. That creates more expense than is necessary. There's some numbers here. The average annual cost of not having a bank account is about $196.50. It jumps up to almost $500 if they're having a prepaid card or something. That's what a lot of employers offer. If you don't have direct deposit, they'll offer their prepaid card. I mean, that's okay, but it's nothing better than having your own account where you're able to monitor your money, having a banking relationship. I mean, people get paid with Chime cards all the time, and that's fine. You know, you're able to monitor your money with Chime, but when it's time for you to need a loan for a car, for a house, for anything, you can't go to Chime for a loan. Okay. So that's why it's important to establish a banking relationship, because in theory, you're going to need a loan at some point in life, whether it's for a mortgage, whether it's for a car. There are just some things you can't pay cash for. Okay, so it's important to have a banking relationship. Reasons for people not having a bank account. Again, we've talked about the check system, so there could be past issues that are preventing people from getting bank accounts, or they may not know that there's a second chance account out there that could be available for them. A lot of people, again, distrust of financial institutions. Could be, your parents didn't trust banks, so you don't trust banks. A lot of the behaviors that we have kind of trickle down from our parents or people that raised us. So
Yes.
the chances are, if your parent didn't have an account, you may not have an account. So
Mhm.
just, again, lack of understanding as to how accounts work. Social barriers, there are cultural barriers where some people just do not believe in banks. Well, we have to overcome that and explain the importance of banks, how they work, that your money is safe, and that it benefits you to have that account. Lack of emergency funds, that's another reason that people don't have accounts. That account may be expensive for them to have because they didn't get the account, they didn't get the free account. They have an account that costs money and they don't have that money to fund that account every month. So those are reasons for people being unbanked. Um, Example here, top of the page on the right side. What does it mean to be underbanked? That's someone or a household that is underbanked. They have a checking or savings account, but they don't use it. Okay. They still go to the check cashing place or, title loan, the Walmart to pay to get their checks cashed. Um, they use money orders instead of checks. Well, in most instances, you have to pay for money orders.
Mhm.
Payday loans, title loans, rent to own services, pawn shops, refund anticipation loans. Those are all kind of examples of predatory lending. Okay. And we want to avoid those at all costs because understanding when we're talking about predatory lending, these are lenders that are preying on the people, and they're preying on the people because they're not bank. So they can charge you a fee, $10 to cash your check. They can charge you higher interest rates. When you go to pawn shops and rent to own companies, there's no benefit to that credit wise because they don't report anything to your credit. Now, if you don't pay them, they're going to put a judgment on your credit. So that's the way that they impact your credit. It's not in a positive way. Okay.
Okay.
So more reasons to have a bank account is to establish that banking relationship, pay history, avoid those predatory lenders. Um, Reasons for people being underbanked. Some people just don't understand about banks. Um, the accounts that are offered at banks may not meet the needs of certain customers, and they didn't get a clear understanding as to all of the options that are available. Um, Limited knowledge of the account components. They don't really understand how a bank account works. The banker opens an account and gives them all the bells and whistles, and they don't have any idea of how that works or how it benefits them or how it could hurt them. Okay. Um, Again, how can you check if you have past account errors or abuse? If you scroll down a little bit, check systems, that 1-800 number there you can call them, provide them with your information. They'll be able to let you know what you have out there as far as check systems is concerned. Um, Bottom of the page, again, reasons to become bank. Your money's safe. You don't have cash at home. You're not walking around with cash in your pocket or in your purse. Your money's secure. You know that I get paid Friday. I know at 12:01 a.m. Friday, my money should be in my account, ready for
Mhm.
me to pay bills, ready for me to establish my emergency fund. Whatever the case is, your money is safe. Um, you have access to your funds, whether you can use the ATM, whether you can use your phone. Everybody has a cell phone. All banks have mobile apps. You're able to check your account. You see the deposits going in, you see the debits going out, creates a paper trail. Again, you have a bank account, you use your debit card to make a purchase, you lose the receipt. You can find that payment history from that debit card. Whereas you pay cash for something and you lose the receipt and something goes wrong, what's your proof of purchase? Where's your paper trail
Right.
for the item that you bought? Again, building a relationship. Everybody at one point in time is going to need some type of financing. It's best to go to the bank as opposed to the buy here, pay here lot, the rent to own companies, the things that we talked about that don't give you any benefit to your credit. And it does help with wealth building. You know, Again, it allows you to establish that emergency fund. It allows you to monitor your money. All of those things lead to wealth building. A little bit about banks versus credit unions. Not a huge difference. I mean, when it comes down to what's offered. One thing is that banks, you're considered a customer. Credit unions, you're considered a member. Typically, you pay a $5 fee to join a credit union. They're both insured. Your money is both insured at either institution up to $250,000. FDIC for banks, NCUA for credit unions. Your money is safe there. Um, like I said, banks have customers, credit unions have members. Sometimes, a lot of times, credit unions may have slightly lower interest rates than banks. They may have different products for banks, just slightly different products, but there's not going to be a huge difference between banks and credit unions. Okay. Any questions about anything, Mimi?
Well, just one quick one, going back to, with my granddaughter. So she should set up the account before she gets her first paycheck. Okay, so that when, because sometimes, and I think this even happened with me at one job, even though I signed up for a direct deposit, the first check was a live check. And they were running kind of like a phantom deposit behind the scenes. This is the way it was explained to me, behind the scenes, to make sure that all the account information, routing number, and all of that was correct. So, and then once it went, that phantom one went through, and it's like, yep, everything is correct, she's good to go. From then on, the next paycheck was automatically deposited. So the first check, she may then need to go into the bank with the check. Are they gonna put a hold on it?
They
Because she
probably
opened the
will.
account with $25, say it was the minimum, $25. The check is for 201.
Right.
Are they gonna put a hold on that check, and for how long? Because she's
They
getting scared
probably
to
will
death.
put a hold on a portion of it
Okay,
for a couple of days.
okay,
Now it's different. It won't be as long of a hold as it would be if it was a personal check that
okay,
somebody wrote, with it
okay,
being a
because it's a
business check.
corporation. Uh-huh,
The hold won't be as long, but it will be some type of a hold because it's a new check. Now, going
first time.
forward, with it being
Mhm.
a payroll check, there'll be no holds on it
Okay,
after, that initial deposit is made.
okay, all right. I have to
Okay.
get ready for that. Okay.
Okay. So the last topic is not necessarily relating to credit, but it definitely helps you with maintaining the credit, knowing where you are with credit. And as far as home ownership is concerned, this is kind of 101. You want to have a budget or spending plan. Okay. This is where you're forced to be very honest with yourself as far as the money that you have coming in and the money that you have going out.
Mhm.
Okay. There's information that's on this budget that myself as a home lender, I don't have access to that from you. And I'll give you an example. When you're purchasing a home, there is something that's called your debt to income ratio. Your debt to income ratio is your monthly income versus your monthly debt. And lenders have different debt to income ratio guidelines that they can approve. A lot of that is based on your income and based on your credit score. So the higher your credit score, the higher your debt to income ratio can be when you're looking to purchase a home. But again, there's some information on here that won't be contained, or that's not a part of our underwriting guideline. And I'll tell you some examples. We don't calculate what your auto insurance is. We don't know what you pay for Netflix, cable, internet, things like that. The only thing that a lender is going to count in your debt to income ratio is the information that's on the credit report, plus if you have a liability such as child support or something like that. Okay.
Okay.
But they're just think about in general things that you pay that are not on your credit report. We just talked about a few things. Groceries. We don't know
Mhm.
how much you spend a month on groceries. That's not calculated in your debt to income ratio. So just because a lender may be able to approve you for a certain dollar amount, that may not necessarily be the dollar amount you want to go with. So that's why it's important to establish that monthly budget or spending plan, because that tells you exactly what you have left after you've paid your bills. That
Mhm.
tells you what you really can afford based on your spending and your spending habits. Okay.
Mhm.
Um, question?
Now, this is good.
Yeah. Yeah. So, I mean, renter's insurance, homeowner's insurance is counted in your debt to income ratio because you're purchasing a home. But
Mhm.
again, the other housing expenses, grass, maintenance that's associated with the house, that's not anything that we calculate because it's not on your credit report. So those are things that you have to, questions that you have to answer, because that's going to tell you where your budget is, what you have left. And then also, once you establish a budget, that allows you to kind of pivot. That allows you to change. If you see that, you take a look at this and you see, man, I'm paying too much for meals out, or I'm buying $400 a month in groceries, but I'm not consuming them all. Well,
Right.
maybe I should cut back on what I'm spending money on, or your entertainment, things like that. Once it's in writing, you're able to shift, pivot, make adjustments, reduce your spending so that you can get to your goal of owning a home, establishing an emergency fund, saving for whatever it is that you want to purchase. Okay.
Okay. So when you're making that budget, and it is important to have, and you get to a month where, say, something unexpected happens, you blow a tire and it's not something that can be repaired at the shop, so now you have to pay for a whole new tire, or something happens with an appliance or something like that you have now, an unexpected expense that comes up.
Right.
How do you work that into your budget or tweak it or whatever, so that you don't get discouraged and completely walk away from the concept of budgeting?
Well, part of your budget should, number one, include paying yourself first, that concept. So paying yourself first, establishing an emergency fund, you know, when you're working and you get in the habit of saving, that allows that. Or worst case scenario, we talked about credit cards a few minutes ago. You have that credit card that's below that 30% usage, you're able to use that for an emergency because you have the available credit, understanding that, okay, I use my credit card this month. I'm really only using my credit card for emergencies. I'm not living off of my credit card. So I
Right.
have the available credit to help me get past this situation, knowing that I have to pay that card off
Okay.
coming forward. So again, budgeting, that's going to allow you to know exactly where your money's coming and going from, that emergency fund, or worst case scenario, using that credit card.
Okay. All right.
Do we want to pivot and use our last few minutes to talk about the benefits of home ownership?
By all means, especially now, because we're hearing all kinds of wonderful things from the Fed and reducing interest rates and all of that. So and if you
I
have a
think
crystal
it's
ball,
a
it tells us
good
where we're going with
transition.
this.
Yes, and Waymon, I think that was an excellent overview of credit. I know a lot of people that would benefit from that presentation, so I'm going to be sharing
Yeah.
that link. But I guess as a transition, I'll just say, once you get your credit in a good place, and some people may be thinking, all I need to do is pay the rent. As long as I can pay my bills or pay the rent, I'm good. But there are benefits to home ownership, and some people may think that it is out of reach for them, and sometimes it's really not. So in addition to just having a nicer place to live where your family can be safe, it is kind of a saving mechanism, right? It helps you live within your budget, and in some cases can give you less stress because you know where you're going to be living. You don't have to worry about a landlord, those types of things. So these are some of the key reasons people like having a home. And when we talk about home ownership, it is one of the best investment tools in America. So you can see I've got a couple of charts here. This first one just shows the trend of home ownership, and you can see it got really high 21, 22, and it's back down in 23 and 24. But when you compare it to the other kind of gold standards, there's gold, there's stocks, and even a savings account. Even though it's dipped, you can still see it's the best investment out there.
Mhm.
So if I can get my computer. So some of the stats say that home ownership is the largest source of wealth creation, and that the average American homeowner the net worth is 40 times higher than that of the average renter.
Yeah.
So
It's
when
the
you,
largest asset a lot of us own.
right. And so
It is an
here's where you,
asset.
right. And this chart just simply gives you a visual of that gap between renters and homeowners. And it's getting bigger, right? Home prices are rising, the value is rising. So people that bought homes a few years ago, they've seen a dramatic increase in their home equity, which is how much cash value they have in their home versus what they owe. So
Mhm.
when we, bringing it back to renting, right? Renting used to be a lot more affordable than owning a home. But you can see by this chart, it's actually becoming, in some instances, more expensive to rent. So rents keep going up. There are large corporations that are buying up a lot of housing stock and turning it into rentals, because there's a lot of money to be had. And it's not necessarily a good thing for our economy or for
Individuals.
people in general.
Mhm.
So we are providing these education seminars because we want to help people understand that they can become homeowners. And so reach out to someone like Waymon and see, do I need to get my credit repaired? How can I start saving? And what I'm going to show you, well, here's an example. If you paid the same amount in rent versus the same amount in a mortgage, you're going to end up with the same amount of outlay, which is $900,000 here. But when you rent, you have no benefit. But when you buy a home, you would have equity in your home.
Mhm.
And you should know that that equity can be pulled out of your home if
An
need
emergency.
be. You need a new roof, or you want to, put on an addition. Once you've earned that equity, you can also use it. So when we talk about making home ownership within reach, there are a lot of programs to help. These are just a few. Waymon can share others with you. But to just give you an example, I recently had a client. She just closed on a property. It was a $190,000 house. She had not a lot of money, in fact, very little. But we were able to work with the seller to give her some credit back on the purchase price of her home. So she had closing costs, and her lender was able to utilize these down payment assistance program and actually found two programs. She received 6,000 from one, 4,000 from another, to again assist with the down payment and the closing costs. So while she did not have a lot of money, she was able to get into a very nice home with her budget. So when you think you are ready to buy a home, this is kind of a fast-paced timeline here. But the first thing you want to do is talk to your lender and make sure that you have the credit to get a mortgage, that you can get pre-approved. And then you want to talk to a realtor. And a good realtor can help you. If you don't know a good lender, they can help you with a good lender, but they can also help you with the scenario that I just showed you, where you may need to look at a house where you can get some credits from the seller. And then once you identify a house that you want to purchase, you go through the inspections and the appraisals. On this particular home that I just shared with you, we knew from the inspection that there was going to need to be a new roof. Again, we negotiated that with the seller. The seller put on a new roof, but the appraiser came back and said, hey, this garage door has peeling paint. We knew that. The buyer was willing to paint the garage door. It wasn't a big deal. But the appraiser wanted that done before the sale closed, which meant that the seller had to scrape that garage door and paint it. So sometimes appraisers want safety things fixed, and it's a benefit to the buyer, right? Because the seller has to do the things that the appraiser wants done. Then once you get to closing, that's kind of the fun part, but you have to sometimes bring that big check. But these are kind of the things. And while you're waiting for closing, you have to do other things like get your homeowner's insurance, wait for the loan approval. And then once everything's approved, you can set up your utilities and then plan for your move-in. So that's kind of the home purchasing process. And how do you choose the right real estate agent? You should really interview, right? That's why I would say find the one that you have a good fit with, a good rapport with, one that communicates well, and one that you think is going to do the best to represent you. So if you have any questions, here are our numbers down at the bottom of the screen there. I hope you can see that. But yeah, that's what we got. Thank you for joining us today. Mimi, I'll turn it back over to you.
Well, thank you, Cindy, and thank you, Waymon, for going through some of the basics that people do need to know and understand to better manage the money that they do have, to kind of plug some of those holes that could be draining the few dollars. It doesn't seem like much sometimes, a couple of dollars here or $3 there. But when you add it up over a year or even multiple years, it's substantial. If they had that money put into a savings account or to investments, they would see the tremendous value of those few dollars here and there every month. And walking them through the process so that they understand what they need to come with and the process in front of them in order to become banked. Because I don't want people just walking in saying, hey, I'm here, here's my check, open my account, cash my check, and let me be on my way. And then they realize that maybe there are some steps or some information that is needed in order to get that account. And then they get frustrated or they sour on the whole idea of having a bank, or you just don't want me, or any number of things that could be going through people's minds that keep them from being a person who has a relationship with a bank. They just don't understand how important that is and what it takes. So I want to thank you for going through the basics, because I never assume that people know the basics and then jump into something more complicated or more sophisticated. And Cindy, thank you for reminding us, especially now when people really do look at how much rent is going for these days versus, because I don't get, granted, my house is paid for, so I've been in my house for decades. But when I look at the amount that people want for rent now, what I paid for is with a mortgage payment, it's like, you gotta be kidding me. But look at what you get in the end: more stability, more security, a piece of the American dream, shelter that you control rather somebody else controls. And especially if you have children, we've heard our superintendent here in university say that one of the best things to give a child security and safety through their educational years is knowing that they have a place to live. So it's absolutely essential for keeping our families also out of poverty, simply because of what Cindy talked about, the equity that is available to you should you need it in an emergency because you have a home. So I want to thank everybody for joining us today. Cindy Theory from Laura McCarthy Realtors, Waymon Williams with Carrollton Bank. Thank you for being with us, and we will have this recording posted to the Shed website shedstl.org the first thing tomorrow morning. So if you need to go back and review any of the information or the handouts that Waymon or Cindy use, they'll be there for your usage. Thank you and good night.
Thank you all.
Yeah.